It's a big number, and I don't know that it can be quite that good. I would hope so. One thing for sure, Scott, is we've watched volatility finally get sucked out of the marketplace, right? I mean, we talked about that for a while. Then in October, we just couldn't break out of that volatility, trading around this 20-plus level. And we did go all the way up towards 28, 29, and then crack back down. And we still hold the 20 up until the midterms. There were three big catalysts in this market. It's the midterms, it's the Fed, and then, of course, it's tariffs. And I know you talked about debt as well, but I'm focusing still on the things directly in front of us, and I think tariffs. If the president's willing to go there, Scott, at some point, and suddenly there's at least a wave of some sort of good news, then Tom's going to be right. But he's got to have some progress. There's got to be something out there.
You know what's on his side?
Yeah.
Come back in the financials.
Yep.
1 week performance. The XLF's up nearly 4%. Citi's up 4.5%, Bank of America 4%, Kari, JP Morgan 3%, Goldman 2.5%. FANGs have had a nice comeback. That works in the favor of the bulls between now and the end of the year if that keeps up.
Yeah, it definitely does. I'd also say, before Josh says that we're right at the 50-day moving average for the S&P 500 if you look at the chart. And this is a really critical point here, because if we can break through and push ahead of 2,800, I think that's a very bullish sign. On the topic of trade and tariffs, the FANG move, the tech move yesterday was, I think, very associated with a belief by investors and buyers that there's going to be some resolution here over the next couple of months.
You want to hear some of these gains?
For the market to move higher, you need that.
Since the October lows, Amazon's up 20%.
Yeah, right.
Facebook's up 6%. Netflix is up 20%. And Alphabet's up 8.5%.
But they went down a lot.
But who thought they would recover in the magnitude in which they have so quickly?
I don't call it a recovery. You call what went on with Facebook a recovery?
Maybe we take Facebook. Facebook has its own issues.
Put it on the screen.
Amazon up 20.
Right,
Amazon up 20. That's a recovery. You agree with that?
Let's go back to the financials.
You want to parse every word?
No.
Do you agree with that? Is that a recovery?
I do agree that the FANG stocks have had a nice bounce, and I would also say they should. They were the epicenter of the damage. They actually went down the most. So you do have a massive bounce in Amazon. Must be respected. I totally agree.
Netflix,
now,
20.
Let's go back to the financials. So now you're back above previous support, which is good. You're up 9.5% off the low in the XLF. And each of the charts all look exactly the same. But now you're facing down a 200-day moving average that is flattened. There is no longer a trend. And it's very sloppy. And so you ask yourself, well, what bounced the most? The stocks that got hit the most bounced the most. That's what a dead cat bounce looks like. And by the way, I was not on the show yesterday. A 500-some-odd point Dow day is nothing to celebrate when you realize that the best days in the history of the market historically have taken place during downtrends, during bear markets. So it's hard not to get excited. It looks great on the screen when everything you own is up $3. But that usually happens in the midst of volatility, not in an uptrending bull market. So I think we still need to be cautious.